I know that most of you are coming into the Forex market with a relatively small trading account, but I also know that you want to grow that account while risking as little money as possible. So today we're going to cover everything step by step. I will show you the easiest way how to do it and where you can actually get started if you're looking to grow a small trading account this year. Okay, so let's start with the very first thing you should think about is your starting amount. So how much money you're comfortable trading with. And this is super important, and I hate to say this, but I learned this the hard way because when I first started trading, I used the money that I should have been using for my bills. So groceries, electricity, and even rent, and it actually made trading Forex way more stressful than it needed to be. So I just want to make sure that you don't fall into the same trap and do the same mistake, and kind of remind you guys that if you are too stressed about the money you are about to invest because it's supposed to cover your basic living costs, trading with it's not going to work because you will be too emotionally attached, too stressed, and it's really hard when it comes to trading Forex and making logical decisions when in the back of your head you're thinking about covering your next week's groceries. Therefore, take a good look at your finances and choose an amount that if it disappears tomorrow, it's not going to throw your life into the chaos. With that in mind, let's actually explore how different starting amounts can impact your trading account growth. So if you decide to start small, you can begin trading with as little as $50 or $100. However, while this is an accessible starting point, it's very important to understand how this will affect your trading experience and kind of set those realistic expectations, right? So starting with $50 means that your growth might be slow and more than likely it will require an extra patience, but at the same time, it is, a valuable and low stress learning opportunity. And at this level, each trade is likely to be small, because that minimizes risk but also limits potential gains as you will be trading with micro lots such as 0.01. However, if you're able to start with $500, $1,000, or even $2,000, you already provide a very solid foundation for, more substantial growth because they simply allow more flexibility in your trade sizes. You can also engage in a wider range of trading strategies. You can set a slightly bigger stop loss orders that are more in line with the market's volatility, which basically reducing the risk of premature exits from potentially profitable positions. And this means that you can give your trades more room to breathe, which basically increasing the likelihood of capturing larger market movements. So now that we figured out how much you're comfortable starting with, in order to grow your small Forex account, the next step will be to deciding what you will be trading. And trust me, this choice is even more significant than you think because picking the right currency pairs is key to maximizing your returns, particularly when you have a small trading account, because you want to avoid the pairs that are difficult to trade profitably due to high cost or even excessive volatility, which in simple terms means that the price of your currency pair is moving way too quickly and unpredictably in unexpected directions. And for traders, especially those with smaller accounts or less experience, excessive volatility can actually increase the risk of substantial losses if they are not able to react quickly or they not have an adequate risk management in place. So for example, starting with major pairs like Euro US dollar or USD JPY can be a very smart move because they typically have the lowest spreads in the market, which means less money spent on each trade, and they are also very liquid, which basically make it easier for you to enter and exit trades smoothly without dramatic price changes. And then there's something like GBP USD and AUD USD. Now these pairs are a bit more volatile than Euro US dollar or USD JPY. However, they can offer more opportunities for quick gains, yet they still maintain very good liquidity in the market, so you are not stuck in positions longer than you'd like. Therefore, choosing pairs like this is particularly strategic as it helps you to manage risk while also allowing you to capitalize on those small but frequent movements, which is actually ideal for growing your small trading account safely and steadily. And this actually brings us to one of the most important steps you can make in order to grow a small trading account account is to define your risk management rules. And when I first started trading 6 years ago, I made a mistake of ignoring this advice, thinking it was too cautious, too boring, I know everything, and I wanted fast results. But I quickly learned that without a solid plan to manage your risk, I was just gambling, and gambling is no way to grow your account, especially not a small Forex account that you're kind of hoping to build into something bigger. But here's how you can keep things under control. So use a position size calculator like babypips.com, and this handy tool can help you figure out that sweet spot where you're risking enough to see real growth, but not so much that a few bad trades could wipe you out. As a matter of fact, it's generally recommended to stick only 1 to 2% of your account on any single trade, because this rule helps you keep losses manageable and your account stable even if a few trades don't go as planned. So in this calculator, what you need to do is to simply fill in the details such as an account balance, risk management, stop loss, and current ask price if of course applicable, and lot size will be calculated for you within seconds. For example, I have an account balance of $1,000 and willing to risk 1% per each trade, and let's say I saw a nice AUD/USD trading opportunity, so I would simply type in the details in. My stop loss would be, let's say, 20 pips, and as you can see, my lot size would be 0.05 and I'm only risking $10. Also keep in mind that no matter how much money you risk, you should also stick to a proper and positive risk to ratio of at least 1 to 2 or even higher, such as 1 to 3, meaning that your potential profit is at least double or triple the potential loss on the trade. So if you are truly committed to growing a small Forex account, then there's one strategy that should be at the core of your trading approach, and that is focusing on high probability trades. And because you have a small account, your margin for error is small and each trade needs to count. So high quality trades usually come from setups where multiple indicators or confluences point to the same outcome, and this could be a combination of technical signals, market sentiment, economic indicators, and certain candlestick and chart patterns all aligning to suggest a strong move in one direction. Therefore, take a look at this example, and this is what I would personally consider a high quality trade, and this is actually a trade that we sent to our VIP members. So this is GBP CAD on the 1 hour chart, and the reason for it to be a high probability trade is due to the fact that, first of all, we have a double top chart pattern that is a bearish reversal pattern. We can also see that the price action is trading below the moving averages. Furthermore, this specific bearish candlestick closed lower than previous support, forming a new lower low, which essentially reinforces bearish bias. So as you can see, we have multiple confluences indicating the same bearish outcome. And as you can see, the trade indeed performed as it was analyzed, reaching 160 pips in the profit. And even though this trade is a swing trade, it could have also been taken as a day trade or scalping opportunity, potentially with a smaller stop loss. Because let's say if we go to the 15-minute chart, you could have reduced your stop loss from 80 pips to, let's say, 30-40, and your risk to ratio would have also increased from 1 to 2 to 1 to 4 or even 1 to 5. So as you start mastering those high probability trades, eventually you will see your account begin to grow, and it's like, leveling up in the game. Better skills, more rewards. So for example, let's say you started with a $500 account, risking 1% only, and you have been trading with a small lot size such as 0.01. Over the time, you managed to grow your account into a $1,000 one. Now, you can potentially trade with a bigger position such as 0.2 or even 0.3, still risking 1%, of course, depending on your trading strategy. And I believe it's a powerful way to compound your gains and actually accelerate your journey towards financial freedom in the markets. So if you found this video extremely helpful and useful, make sure to let me know in the comment section down below. But if you're looking for a solid and reliable trading strategy to start growing your small Forex account, then I highly recommend checking out this video over here.